A very good morning to everyone present here. On behalf of St. Francis Institute of Management and Research, it is my privilege to welcome all the distinguished guests, Chairman Brother Alphonse Nessamini, Dr. Shalini Sinha, Director of SFIMAR, Dr. G. Ramesh, Deputy Director of SFIMAR, Registrar Brother Albin Tete, respected faculty and staff members, industry experts, researchers, and dear students to the two-day national seminar on GST reforms and sectoral growth, unlocking potential in manufacturing, services, e-commerce, insurance, healthcare, and real estate. This seminar, organized by St. Francis Institute of Management and Research in collaboration with the Indian Council of Social Science Research, New Delhi, brings together academicians and professionals to explore the evolving impact of GST across key sectors of the Indian economy.
GST has undoubtedly been one of the most transformative economic reforms in India. Since its implementation, it has restructured the indirect taxation system, improved transparency, and significantly influenced the functioning of industries and businesses across the country. Through this seminar, we aim to create a meaningful platform for discussion, knowledge sharing, and academic dialogue on how GST reforms continue to shape sectoral growth and economic development.
It is our privilege to introduce our institution organizing today's seminar, St. Francis Institute of Management and Research, Mumbai. SFIMAR is an A+ accredited institute by NAC, approved by AICTE, and affiliated with the University of Mumbai. The institute offers a range of management programs, including MMS, PGDM, BMS, and PhD in management studies, aimed at developing future business leaders through academic excellence and industry-oriented learning. With a strong focus on professional development, practical exposure, and holistic education, SFIMAR continues to nurture students into competent and responsible management professionals. Before we proceed further, we would like to acknowledge the support of the Indian Council of Social Science Research, New Delhi. ICSSR plays an important role in promoting research and academic dialogue in the field of social sciences across the country. Through initiatives like seminars, conferences, and research support, it provides valuable platforms for scholars and institutions to engage in meaningful discussions on issues that shape our economy and society. We are truly grateful to ICSSR for collaborating with St. Francis Institute of Management and Research to organize this two-day national seminar and for supporting this academic initiative.
To formally begin today's proceedings, we will now have the SFIMAR anthem, which reflects the spirit, values, and collective identity of our institution. May I request everyone present here to kindly rise for the anthem led by the SFIMAR choir.
Make me an instrument of your peace. Where there is hatred, let me bring love. Where there is injury, your pardon, Lord. And where there's doubt, through faith in you, make me an instrument of your peace. Where there's discouragement, let me bring hope. Where there is darkness, let there be your light. And where there's sadness, let me bring joy. Make me an instrument of your peace. It is in pardoning that we are pardoned. It is in giving that we do receive, and it's in dying that we are born to life. It is in giving that we do receive, and it's in dying that we are born to life.
Thank you. Please be seated, everyone.
In Indian tradition, the lighting of the ceremonial lamp marks the beginning of an auspicious occasion. It symbolizes the movement from darkness to light and reflects the pursuit of knowledge, wisdom, and learning that lies at the heart of every academic endeavor.
May I now request our esteemed dignitaries to kindly come forward for the ceremonial lighting of the lamp, marking the formal inauguration of this national seminar. I request our chief guest, Ms. Gajanan Kanande, Joint Commissioner of State Tax, to please come forward. Our keynote speaker, CA Manish Gadia, Chartered Accountant, Partner at JMJ and Company. Our Chairman, Brother Alphonse Nesimani. Our Registrar, Brother Albin Tate. Our Director, Dr. Shalini Sinha. Our Deputy Director, Dr. G. Ramesh. Dr. Natika Puddhat, our convener. Our very first participant to have registered for this seminar, Ms. Hiral Mishra from MMS first year, to kindly come forward and join us in the lighting of the lamp.
Thank you to our distinguished dignitaries for inaugurating this seminar and setting the stage for the engaging discussions and insightful sessions to follow today. We request our student coordinators to escort our respected dignitaries to the dais. Our chief guest, Mr. Gajanan Kanande, Joint Commissioner of State Tax. Our keynote speaker, CA Manish Gadia, Chartered Accountant and Partner at GMG and Company. Our Registrar, Brother Albin Tate. And our Director, Dr. Shalini Sinha.
We are fortunate to have with us today Dr. Shalini Sinha, Director at St. Francis Institute of Management and Research, a distinguished academician with over 3 decades of experience in academia, research, and institutional leadership. She holds a PhD in management and an MPhil in economics from Jawaharlal Nehru University, New Delhi. She is a gold medalist in MA Economics from Delhi University. Dr. Sinha has been associated with several renowned management institutions and has played a pivotal role in strengthening academic programs, research initiatives, and institutional development. We are truly honored to have her guidance and presence with us today. May I now request ma'am to please come forward and welcome the gathering.
Thank you. A very good morning and a very warm welcome. Respected Chief Guest for the day, Mr. Gajanan Kanande, Joint Commissioner, State Tax. Keynote Speaker for the day, Mr. Manish Gadia, Professional Chartered Accountant and Proprietor GMJ and Company Chartered Accountants. Respected Reverend Brother Alphonse Nesimani, Chairman SFIMAR and Assistant Superior General CMSF. Reverend Brother Albin Tate, Registrar SFIMAR. Our esteemed resource persons for the day, Program Convener CMA Dr. Natika Poddar, co-convener Dr. Smita Jesudasan, Deputy Director Dr. G. Ramesh, Reverend Brother T.V. George, Registrar SFIMAR PGDM, our very special guest Mr. Vijay Gosar, resource person Ms. Bhumika Agrawal, practicing chartered accountant, dear faculty members, staff and students, distinguished academicians, industry professionals, faculty members, researchers, a very, very good morning and a warm welcome on the occasion of this distinguished seminar sponsored by Indian Council of Social Science Research and organized by our institute, St. Francis Institute of Management and Research, on the theme GST reforms and sectoral growth, unlocking potential in manufacturing, services, e-commerce, insurance, healthcare, and real estate. It gives me great pleasure to welcome all of you on behalf of the management of this institute. At the very outset, I would like to express my sincere gratitude to Reverend Brother Alphonse Nizomani, Chairman SFIMAR and Assistant Superior General CMSF, for his constant guidance, initiatives, and research activities in the institute, for his active support to all these activities which lead to the quality and upgradation of the academics and research in our organization. His visionary leadership continues to inspire us to pursue excellence in teaching, research, and institutional development. We are also deeply honored by the presence of our chief guest, Mr. Gajanan Kanande, Joint Commissioner State Tax, whose extensive experience in taxation administration and policy implementation brings immense value to the deliberations of this seminar today. His presence today greatly enriches this academic forum. I would also like to extend a warm welcome to our distinguished resource persons, keynote speaker Mr. Manish Gadia and Ms. Bhumika Chetan Agarwal, who will be sharing their professional insights and expertise on the evolving GST landscape. At the outset, I would also like to express my sincere gratitude to Indian Council of Social Science Research for supporting this important academic initiative. Partnerships like this strengthen the role of academic institutions as spaces where policy, research, and practice come together in a meaningful dialogue. The introduction of goods and services tax marked a historic milestone in India's economic reforms. Often described as one nation, one tax, GST has fundamentally transformed the country's indirect taxation framework. Beyond simplifying the taxation structure, it has influenced the way businesses operate, how sectors grow, and how markets integrate across the nation. However, reforms of this magnitude also raise important questions. How has GST reshaped competitiveness in manufacturing and services? In what ways has it accelerated the formalization in sectors like e-commerce and insurance? What challenges remain in sectors such as healthcare and real estate? These are some of the important questions that this seminar seeks to explore today. Over the next 2 days, this platform will bring together academicians, researchers, industry professionals, GST practitioners, and students to engage in thoughtful discussions on the sectoral implications of GST. The thematic sessions, paper presentations, and panel discussions are designed to generate insights that are not only academically rigorous but also relevant for industry and policy. At SFIMAR, we strongly believe that institutions of higher learning must go beyond the classroom teaching. They must contribute to knowledge creation, policy dialogue, and thought leadership. Our journey as an institution from our NAC A+ grade NBA accreditation to our autonomous status reflects this continuing commitment to academic excellence and meaningful research. I would like to take this opportunity to congratulate the convener, Dr. Natika, co-convener, Dr. Smita, along with the entire organizing team for their dedicated efforts in bringing together this seminar. My sincere appreciation goes out also to our faculty, staff, and student volunteers who have worked tirelessly to make this event possible. I encourage all our participants and speakers to use this forum to share ideas, question the existing perspectives, and contribute new insights on GST and sectoral development. As India moves steadily towards the vision of Viksit Bharat 2047, reforms such as the goods and services tax will continue to shape our economic future. I hope the discussion over the next 2 days will contribute meaningful insights towards this journey. With these words, I once again welcome all of you to SFIMAR and to this seminar and wish this seminar a great success. Thank you. Thank you very much.
Thank you, ma'am, for the cordial welcome.
We are now honored to introduce our chief guest for the day, Sir Gajanan Kanande, Joint Commissioner of State Tax. Sir holds an important leadership position in the State GST Department, where he plays a significant role in administering and implementing GST policies. Through his work, he has contributed to strengthening tax governance, compliance, and regulatory processes within the GST framework.
We will now take a moment to felicitate our esteemed chief guest, Mr. Gajanan Kanande, as a token of our gratitude for gracing this occasion. May we request Registrar Brother Alban Tete to kindly present the token of appreciation to our chief guest, Mr. Gajanan Kanande. I kindly request Registrar Brother Alban Tete and Sir Gajanan Kanande to please come forward.
Thank you, brother, for the felicitation. Sir, we are truly grateful for your presence here today. May we now request that you address the gathering. We request Sir Gajanan Kanande to kindly step forward and address the gathering. Thank you.
Good morning to all the distinguished guests, respected organizers, industry professionals, industry representative professionals, and dear participants. It is indeed a privilege for me to be present here to share a few thoughts on a very important subject, that is GST reforms and sectoral growth, unlocking potential in manufacturing, services, e-commerce, insurance, healthcare, and real estate. It is presented by Indian Council of Social Science Research and St. Francis Institute of Management and Research in collaboration with ICSSR. I sincerely thank organizers for inviting me this forum and for giving the opportunity to interact with such a knowledgeable and responsible audience. As we know, the introduction of goods and service taxes is a significant tax reforms in the history of economy of India. So everybody is talking about the GST reforms, but why it was required and what was the taxation system before introduction of GST, we should understand first of all. Then we can understand the reforms what happened. It's an indirect tax, means not directly collected from the consumer. So we appoint an agent as a businessman who is providing services or goods to you. So actually he is the agent on behalf of government who is collecting the tax. That's why it's an indirect tax. And in case of direct tax, that's the income tax. It is directly paid by the person who is having the income which is taxable. So in case of indirect taxes, we were continuously increasing the tax rates because of the cascading effect. Now in the ideal taxation system, there should not be any cascading effect. It is not an ideal system. So how it was before understanding the GST reforms, we should understand the difficulties we were facing. So in first phase, when we are selling the goods out of Maharashtra, then we had to levy 2% tax on those goods. So suppose any person from the Maharashtra is selling the goods to the Karnataka person, then he has to levy the 2% tax, and there was no input tax credit. There was no input tax credit for that 2 rupees, so it was the cost. And again, in Karnataka, tax was levied on not 100, it was on 102. So if the tax rate is 10% and the reform is not there, it's a technical word. If the Maharashtra person is levying 10 rupees tax on 100, then the cost was, Karnataka person was 110, and he has to levy the taxes on 110. So that way, in every stage, the price was increasing and there was no input tax credit. So 110 tax was levied. Then again, if he is selling the goods on 120, then on 120 tax was being levied. So there was a cascading effect, and at every stage, goods or services become the costlier. This was the first difficulty. And the second difficulty, if the manufacturer having the procuring the goods from other, we can take the example of the vehicle, manufacturer of vehicle. If he is procuring the tires and the switches and the steel and all these things, though he has to pay the taxes on goods and he is getting the input tax credit, but on services, means manufacturer of automobile was not getting the input tax of on the services. So again, that was the cost added into the price of that vehicle. So that way there were two most difficulties taxation, indirect taxation system was facing. That first was the cascading effect and not getting the input credit of the services in case of manufacturer. And if the service provider is there, if he is providing any services, means the software company who is supplying the software, we were having the intangible goods also, but other services where he is providing the services, he was not able to get the input tax credit of goods. That way, on every stage, the price was going higher and higher, and we were not competitive in the international market because of this cascading effect. So the GST reforms happened, and all these difficulties were phased out. We were having so many 17 to 18 indirect taxes, and those were subsumed. And then by the introduction of GST, we could say that there is a one nation and one tax, the first of all. And another difficulty was there. We don't have the ultimate taxation system, which is saying that on the destination base or the consumption basis taxation. If the goods are traveling from one state to another, the tax was not flowing with that. The input tax credit was not flowing with that. And if any state is consuming the goods, there was not sure that that state will get the benefit of the consumption of the goods. And with the introduction of GST, we achieved that. So that way, GST reforms happened. And with the introduction of this GST, the various tax were subsumed. That was the VAT, service tax, excise duty, entry tax. and the compliance become very easier, transparent, and the administration was also improved, tax administration. And we can say that with the GST reform, we could introduce the ease of doing business with the implementation of GST, because the compliance was become very simplified, and the tax person, where he has to comply with the multiple departments, mean the excise department, then the VAT department, then the octroi, the local taxes. So he has to comply only one tax administration, that is the GST administration. So with this implementation, we move forward, but the success is not totally dependent upon the legislation and policy making. It requires the same response from the business community. And in case of GST, we discussed with the Gosar sir and Gadia ji that how the response from the business community and the tax collection is showing the response. Now we are having 2 lakh crores per month collection, which is huge in case of India, with the help of all states and the stakeholders. Without support of technology, it was not feasible at all. And with the GSTN, I was the part of that all technology support, and Gadia ji, and we worked together so many times. And the robust system, which is designed by Mr. Nandan Nilekani for Infosys, he is the architecture of the GSTN system, and only one front-end support, that is GSTN. The taxpayer can submit his registration application, submit his returns, submit the application for refund, and so many things can be done by the single portal only. And the huge challenge was about the returns, that all India taxpayers will submit their returns within a 10 days of window, and it was successfully accepted that challenge. And at the inception, at the time of inception, 14 lakh taxpayers were registered on the GSTN portal, and we smoothly handled that load. And this is the biggest taxation system in the world, and we are leading, and we are trying to make more facilities, introduce facilities to the taxpayer. E-way bill is one of that facility. Then the e-invoice is also the facility we are providing. And the QRMP means quarterly return. So if the startups are there and the new registration obtained by any taxpayer, and if his turnover is not, taxable turnover is not more than certain limits, then he can submit this quarterly return. He need not to file monthly return, and he just has to make the payment monthly only. So this is a very beneficial system for the low turnover business. Then I request all the taxpayers from this forum, from the government of Maharashtra and government of India, GST, from GST department, that the bookkeeping is the important factor in case of compliance. So from this forum, I request all the people and all the participants and the professionals that bookkeeping, if the bookkeeping is not means according to the provision of law, then there will be certain difficulties faced by the taxpayers, because we are introducing AI. You know the case of that Hyderabadi biryani, where we have unearthed the tax evasion of 70,000 crores with the help of Hyderabad biryani. That issue has happened, where there was a POS system. The restaurants owners were deleting their cash invoices and paying the taxes on the online payment only. And with the help of AI, we got the control of that server, and we unearthed the tax evasion tuned to the 70,000 crores. So from this platform, I request all the stakeholders to keep their books of account updated, so it will not happen, and we will not visit your premises, or we will not call you in our offices. The second thing is important, that the continuous amendment is happening in GST. We are issuing circulars, we are issuing notifications, and the amendments are happening. So if you are unaware about all these happenings in GST, So then certain compliance may not be done by you, and then there will be a penalty and interest and all these things. So you should be vigilant about the amendments and all these things. And we are not having the approach of the enforcement. We are not there to just penalize you. We are implementing agency, so we are ready to help you. So at any point of time, you can visit our offices. Even I can invite Sinha ma'am that you can bring your students to our department. They can visit our premises, and you can have the look how the department is functioning. What is our approach?
Thank you very much.
So it will greatly help to the student to understand. So we are having office at Bandra also. You can visit Bandra or Mazgaon premises, and how we analyze the data, how we find the taxpayers who are not compliant, where the compliance is missing, and that way we issue the notices very few taxpayers. So this was the approach, and certain things we are also thinking, or we are trying to implement. The first and foremost thing is that voluntary compliance. We are expecting, this is the self-assessment procedure where you file the return. So we are expecting voluntary compliance. If the compliance is okay, then we will not verify the books of account, we will not visit the premises. Then there should be a data-driven tax administration. We should just go by the data, not the gut feeling or just doubting the taxpayers. We will not do that. We are trying to implement the tax-driven administration. This is our objective. And we are trying to reduce the litigations. So it is totally depend upon your response, how you respond, and how you try to reduce the litigation. And we are promoting digitalization and automation in compliance. So that way we are thinking that whenever you punch the invoice, it will automatically post on the server, and that way you will not need to verify your purchase register, ITC register, match with the 2A, 2B. These are the technical words. You are not related to that, but you need not to verify your input tax credit. It will be automatically credited into your account by the posting the invoice. So with this, before I conclude, I would like to once again appreciate the efforts of the organizers for conducting this seminar. Such initiatives help bridge the gap between tax authorities and stakeholders and contribute to building the better understanding of GST framework. I am confident that today's 2 days seminar will provide valuable insight and practical guidance to all participants. Thank you all for your attention. I wish the seminar great success and fruitful deliberation. Thank you so much.
Thank you, sir, for your insightful address and for enriching this session with your words.
We truly appreciate you taking the time to share your thoughts and perspectives with all of us today. We now move to the keynote address, which will focus on the theme of GST reforms and their evolving role in shaping India's economic landscape. It is my privilege to introduce our keynote speaker for today, CA Manish Gadia, a senior professional and a practicing chartered accountant since 1997 and a partner at GMJ Co. and Chartered Accountants specializing in GST. CA Manish Gadia is widely respected in the professional and academic community for his deep expertise in indirect taxation. Over the years, he has delivered more than 750 lectures on service tax and GST across several prominent platforms, including professional bodies, management institutes, industry associations, and corporate forums. In addition to his professional practice, he has made significant contributions to academic and professional literature. He is a co-author of several important publications, including works on cooperative housing societies, valuation, and EPC contracts. He has been a regular contributor to professional journals and GST reference publications. CA Gadia has also several has performed several leadership roles within the Institute of Chartered Accountants of India and served as the chairman of the Western India Regional Council of ICAI for the year 2021-22. His contributions extend to various committees related to professional development, indirect taxation, and capacity building within this profession. With his rich experience in practice, academia, and professional leadership, we are truly honored to have him with us today to share his insights on GST reforms and their implications for businesses and the broader economy. We would like to express our appreciation with a small token of our gratitude. May I request Professor Anne Jose to kindly come on the dais and felicitate CA Manish Gadia. Thank you, ma'am, for the felicitation. May I now request Sir to kindly address the gathering and deliver the keynote address on GST reforms.
Good morning. So it is my honor and privilege to deliver a keynote address at this prestigious two-day national seminar organized by St. Francis Institute of Management and Research. So it's a great thing. So whether GST is there in your syllabus? Yes or no? How many of you are studying GST in your syllabus? 1, 2, 3, 4, 5. Only 5 students opted for GST. So it's great that even though if it is not there in your syllabus, you are attending this. So I came to know that this institute has been established in the year 2002. So completed 24 years. So it's a great path you have covered. So really a great round of applause for the institute. An institute is also having very inspiring motto. So it's really inspiring. What is that? Enlightening minds and defining leaders. And this is accredited A+ from NAC. So really great, and it's really my honor to be here as a keynote address. Thanks to the institute and the organizing team for inviting me here. So this 2-day seminar, but before going to this, how much time I have? 45 minutes. So मैं सिर्फ 45 मिनट्स ही आपको परेशान करने वाला हूँ. So this 2-day seminar is on GST reform and sectoral growth, unlocking potential in manufacturing. Ms. Agrawal is here for that. E-commerce, insurance, healthcare, and real estate sector, which are one of the most important sector as far as the GST is concerned. Since its rollout, which date GST has been rolled out in India? July 2017. So we have seen a journey of almost 8.5 years, or you can say 9 years of GST. and it is one of the most far-reaching fiscal reform in independent India. GST has not merely changed how taxes are collected, it has fundamentally restructured the cost economics, competitive landscape, and compliance behavior of virtually every sector of the economy. As GST continue to evolve, this rate rationalization, system upgrades, and policy correctness is the imperative that academic, industry, and government come together to assess its impact sector by sector, identifying gaps, and forge a path toward more inclusive and efficient taxation. So now I am coming to GST, which is the India's most transformative tax reform. Ladies and gentlemen, allow me to spend a few moments contextualizing what GST is and why it matters so profoundly to India's economic architecture. The GST is a comprehensive multi-state destination-based tax that is levied on every value addition in the supply chain. What is the meaning of all these things? What I said, that multi-state destination-based tax and on the value addition. So as Kanande sir has said, that earlier what was happening is tax was not traveling with the supply, but now tax is traveling with the supply, and ultimately the consumer of the goods are paying the tax. So I will cover a little bit later what is the meaning of all these things. It is a tax on the supply of goods and services and collected each stage of production and distribution process, but designed so that the end consumer bears the ultimate tax burden and make it consumption based tax. So India, we all know that, is a unique country. More than 150 countries in the world have adopted either GST or VAT regime. But India has adopted a dual structure. What is dual structure? CGST and SGST. So as I said, more than 150 countries have adopted, but only 3 countries have adopted this dual GST model. And out of that also, we are the only country we have adopted it successfully. And after the success of our GST, now one of the biggest economy of the world has started studying our GST model and trying to implement the same in their country. Which is that country? USA. So it's a great privilege or honor for us that we are in a position to guide to the one of the best economy of the world on this matter. It's a destination based tax. Tax accrues to the state where the goods or services are consumed. So suppose if any goods has been manufactured in Maharashtra, the manufacturer has sold that goods to Karnataka, to one of his distributor, and that distributor has sold that goods to Tamil Nadu. So once we say destination based tax, so it will travel from Maharashtra to Karnataka and Karnataka to Tamil Nadu. That what we say a destination based tax. It multi-state with ITC. What is ITC? Not a cigarette company. Input tax credit. So what is the meaning of that? So as I said, the manufacturer in Maharashtra will sell that goods to a dealer in Karnataka, maybe 100 rupees goods, he has sold 200 rupees to the distributor. On that he must have charged 18 rupees to that manufacturer, to the distributor. That 18 rupees also will be available as a set off to the distributor who is in Karnataka. And that Karnataka person is selling that goods at 110 to a Tamil Nadu retailer or to a customer. That 110 plus 19.8 will go to the Tamil Nadu, but effectively what he will pay? Only 1.8 rupees. That is the value addition what he has done on that 10 rupees. I hope you understood. In India, we have threshold based exemptions also. If you are a trader, then up to 40 lakhs you are not required to have registration, trading of a goods or a manufacturer of goods. But if you are supplying in supply services, then the exemption is of 20 lakhs. Most of the countries in the world have adopted a single or a dual rate of GST. But India, how many rates we have? 4. Which are that? What are that? So currently it is 5%, 18% and 48%. Previously till 22nd September 2025 it was 4, 5, 12, 18 and 28. So now 12% has gone and 28% has been shifted to 40%. So 5%, and apart from that we also have a nil rated tax or some exemptions are being given for a most important goods or services like health insurance, life insurance. There is no tax involved on that. But the luxury and sin goods should also be taxed at 5%? No. So goods like aerated water, thumbs up, Pepsi, what you are having, or maybe a cigarette, these are the sin goods, or maybe a luxury goods. So will be taxed at higher rate of 40%. But the essential goods are taxed at 5%. What is the administrative architecture of GST? We have a GST Council, which is chaired by the Union Finance Minister of our country, and the member will be all the finance minister of the state, and they take a policy decision. Then, as Kanande sir has said, GSTN, and he has broadly said what GSTN is doing. It is a infrastructure, IT infrastructure, where all the facilities like filing of return, payment of tax, registration, etc., issuance of notice, everything is available on a single portal. So these are the administrative architecture. And again we have two GST department, one is the central and another is state, and SSCs are divided between them. Now moving to next part, the journey of GST, which is very important. Unless you will understand what is the history, it is difficult to understand the subject. So I would say गवर्नमेंट हैज स्टार्टेड, कोशिश कर रहे थे 1999 से टू इम्प्लीमेंट जीएसटी इन इंडिया, and they have formed a Kelkar task force to do a research to understand how we should bring in all that things. In 2000, our then Prime Minister Atal Bihari Vajpayee ji has set up an empowered committee of State Finance Minister chaired by Asim Das Gupta, then Finance Minister of State of West Bengal, to design a model for GST. In 2003, the Kelkar Task Force formally recommended how GST should be implemented or how GST should be in India. 2005, the 12th Finance Commission recommended introduction of national VAT before introduction of GST to test that. And you all know that the VAT has been introduced at the state level, all the state in the year 2005. So again there is some legislative background, I am not going into that detailing, but the push to all this background work has taken place in the year 2014 when the Modi government came and they have introduced a constitutional amendment bill 2014 to revised version of broader political consensus, because prior to that in our constitution we have state list, we have a center list, but there is no concurrent list. And for implementation of GST, we want that constitution should have concurrent list also, where both can tax a single, both can recover a tax on the single transaction. So that was moved in 2014. They build up consensus between the state, and the model GST law has been brought in the year 2016 for comment from various stakeholders. And on 1st July 2017, it has been introduced by our Prime Minister, then Prime Minister Narendra Modi, and the President Pranab Mukherjee in the midnight of 1st July 2017, and given a slogan, or actually a one nation, one tax, one market. Prior to that, we have a different rate for same product in a different state. But now, it is across India, it is the same. So this was the introduction. After that also, there are various evolution in last 9 years has took place. First is launch of e-way bill for any movement of goods more than rupees 25,000 in April 2018 onwards. Then introduction of e-invoicing in a phased manner from October 2020 for B2B transactions. Then Kanande sir has said that quarterly return, monthly payment scheme for a small taxpayer was introduced in the year January 2021. Then round of rate rationalization took place. Particularly started with 50th GST Council meeting in July 2023, and from 4 tax rate now we are on a 3 tax slab. Then now the ongoing discussion is also going on to introduce petroleum product like petrol, diesel, ATF, etc. How we can bring in the same into GST. Now coming to revenue part, as Kanande sir has said, so when the GST was introduced in the year 2017-18, at that point of time, the monthly collection for the government from GST was in the range of 85,000 crore. And now, currently, Do you know what is the roughly monthly collection of GST? 2 lakh crore. So now in a year, in a 8.5 year, 85,000 to how much? 2 lakh crore is really a big amount for the government. So you can see the revenue for the government has been increased substantially after introduction of GST. And this 2 lakh crore, whether it will remain with the central government, yes or no? No, it will be shared between central government and the respective state government, and the share is roughly 50-50%. So whatever collections are there, on the base of the consumption, how much that goods or services has been consumed in that state, the respective 50% that state will get. And this is the beautifully defined sharing of revenue between the central and the state. Now the next questions come to our mind, that it is a beneficiary for the government. Correct? Yes or no? So what is the benefit to the consumer industry and industry then? Only beneficial to government? Yes or no? So there is also a benefit to the consumer. What is the benefit? It's eliminate cascading effect of taxes. Previously, we used to pay excise duty on the manufacturing of goods. Then VAT on sale of goods. The credit of the excise duty was not available to the trader. So it will not pass on to the consumer. So goods will become costlier. Then there was octroi duty also. How many of you are from Mumbai? Seven. So there was octroi check naka. Correct? And you must be seeing at that point of time, maybe 9 years or 10 years back, the huge line of trucks were there. And whatever octroi duty has been paid, credit was not available to anyone. So it will become again a cost to the consumer. So there was a cascading effect, which has been now removed. And after removal of cascading effect, what is the benefit? That the product will become cheaper. If you have any question, you can ask directly to me instead of discussing among yourself. Next is uniform prices across India. Previously that was not there, so it is easy for consumer, whether he buy product from Maharashtra, Karnataka, Tamil Nadu, Gujarat, he will get at the same price because the tax rates are same. Next is greater transparency. How greater transparency? You are seeing that whenever you are buying any product or any services, GST is shown separately on the invoice. So you know how much GST you are paying or how much taxes you are paying on this goods or services what you are consuming, which was not possible earlier. Excise duty क्या था हमको पता नहीं, octroi क्या था हमको पता नहीं, VAT जो लगता था वो खाली हमको दिखता था. Correct? But now total transparency is there. Improved quality and competitiveness, because across India same rates are there, so competitiveness has been increased. So whenever competitiveness increase, who will benefit? Consumer. And then availability of services. So various kind of services are available at a cheaper price also. What are the benefit to the industry? First and foremost is that input tax credit is available to them. Correct? As I said, excise duty credit was not available. Now it will be available to them. Logistic efficiency. Now octroi has been removed. Checkposts are removed across the state. So now the movement of goods are faster. The cost of transportation, warehousing also reduced. Earlier, since Bhumika madam is there and I think she is going to cover, so I will restrict myself that warehousing, etc., that benefit. So I am not going into that. The next is simplified compliance. Previously, I need to file octroi, I need to file excise return, GST, service tax return, VAT return, various due dates. Now simplified, only one return has to be filed. So compliance has been reduced. Competitive neutrality. Then there is no arbitrage between state. So that is benefit industry. That MSME formalization, QRMP, quarterly return monthly payment scheme, that composition scheme is there for a smaller supplier. So that will also give benefit. And definitely export competitiveness is there. So once the product in India will become cheaper, then you can increase your export also. How the product will become cheaper? Since madam is here, so I am not going into detail, but definitely she is going to cover, I hope so. Now what is the benefit to the government? Already we have discussed tax revenue has increased multifold. If tax revenue has increased, then parallel economy has been curbed, fake invoicing, fake ITC, circular trading, all this has been reduced substantially. So it will benefit to in the economy. So tax evasion has been reduced, compliance has been increased, and revenue has been increased. And definitely it has widened the tax base also. It has improved ease of doing business also. And definitely department now have a data intelligence. How it will work? So you must have read in the newspaper that government has done some data analytics and they have come out that across India, the restaurant which is not disclosing revenue is to the tune of 17,000 crore. So all this data is now available on the GSTN portal. So it will be easier for only not for the GST purpose, but for the income tax purpose, for any policy decisions also, it will be helpful to the government. Now I will move to industry expectation from GST reform. What is that? Definitely जितना भी रेट कम करो, हमको रेट और कम होना चाहिए. So rate rationalization, that again if government will reduce the slab, now it is 5, 18, 28, nil rate. For jewelry it is 3, diamond 0.25%, residential again 7.5%. So different slabs are there. So it is expectation they will reduce the rate. Then review of inverted duty structure. What is inverted duty? Where my output product tax rate is lower than my input. Take an example of packing industry. The paper, what is required for packing is taxed at 18%. But the cartoon which is made for that paper is taxed at 5%. So that tax has been accumulated. So that rationalization is also need. Earlier that was there on garments and footwear, which has been now brought into the normal. So now no inverted duty, but this industry also need that. Then inclusion of petroleum product. That what industry want. Again, if it will come and they will get input tax credit of the same, then the cost will also reduce substantially. Then compliance simplification, also one of the expectation of the industry. Reduction in the frequency and complexities of the tax return, because now I need to file one output tax return and one GST return on a monthly basis. So whether it can be reduced. Stabilization of GST network, because daily if we are seeing some or other changes are coming on a daily basis. Yesterday also they have come out with some changes. Definitely it is in the betterment of the industry, providing some data to the industry. But again, once it will be stabilized, definitely it will take some time, but definitely it will stabilize. Then streamlining of input tax credit. Currently there are various block credits are there. What are the block credits? Section 17(5), which they says that whatever you consumes, food and beverages credits are not available, motor car credits are not available. So there are various lists. If that list can be reduced, then the matching and reconciliation process can be made little bit more simpler. Next expectation is removal of e-way bill. Then reconciliation of notices. As of now, any service of notice or uploading of notice on the department portal is valid. How to track that is again a challenge. Then ITC and refund reform. So if refund can be given much faster. So definitely they have improved a lot in last 9 years, but it is always more, ye dil mange more. Sector specific concerns are also there, like you are going to cover real estate. Again, real estate, there is the issue of ITC and lot of complications are there. E-commerce, whatever complications are there, definitely manufacturing, you are going to cover, ma'am. So, even after 8.5 years, GST Appellate Tribunal has not been formed. It is expected to start functioning very soon, but it is the industry demand that it should start as soon as possible. My expectation, my gut feeling saying that definitely end of this year, maybe by November or December 26, it will start. There should be consistency in advance ruling. And most important is reduction or in retrospective amendment. So in GST, government is doing various retrospective of government. What are that? Any amendment which will maybe made applicable maybe from 1st July. So it will again difficult for industry to keep track of the same. Now, this is the expectation of the industry. Government also have some expectations from GST stakeholders. What are that? Enhanced compliance. So all the return should be filed, tax payment should be made in time. And it should be accurate. Then accurate e-invoicing should be done. And proactive reconciliation of input tax credit should be done by the stakeholder. Combating fake ITC fraud. So you may be knowing that every month we are seeing that they have come out with some ITC fraud, fake invoicing. Without procurement of goods or services, ITC has been taken. So this has to be reduced to nil. That is what the government expects. Then broadening of tax base. Definitely all the business should come within the ambit of GST. And next important thing is digital adaptation by the industry. Because now everything is digitalize. Now, not taking much of your time, I will conclude that GST as a foundation of Viksit Bharat in 2027, which is the centenary year of our independence. GST stands as one of the most foundational pillars of the economic architecture we are building. A well-functioning, rate rationalized, compliance efficient GST system is not merely a tax reform. It is a cornerstone of India's aspiration to become a developed, global, competitive and inclusive economy. The journey of GST from the vision of Kelkar Task Force in the year 1999 to the record collection of GST today is a testament of India's democratic and federal government framework. It has not been a smooth journey. There have been teething troubles and genuine hardship for business. But the trajectory is unmistakably upward in revenue terms, in compliance terms, and in structural benefit it has delivered to the economy. As a tax professional, researcher, industry leader, and policy maker, we carry a shared responsibility to ensure that GST fulfills its transformative potential. Industry must comply honestly and engage constructively. The government must listen, simplify, and reform continuously. Researcher must generate evidence that guide policy reform. An institution like St. Francis Institute of Management and Research must create an intellectual space like this seminar, where this conversation happen with rigorous honesty and shared commitment to the India's economic future. So my earnest request, so whatever may be the outcome, and if any policy decisions, definitely you share with the department, with the government, so it will help to grow the Indian economy in much better way. I am deeply honored to address this gathering, and I look forward to the rich deliberation over the next 2 days. I am confident that insights generated here will contribute meaningful not only to the academic disclosure but also to the practical reform agenda of GST in India. Jai Hind, Jai Bharat. If you have any question and if organizer permit, it will be my pleasure to take the same.
Thank you, sir, for the insightful keynote address and for sharing your valuable perspectives on the evolving GST landscape and its impacts across various sectors of the economy. Once again, a small reminder, we are open for questions. Anyone?
Okay, we will now have a short tea break. Participants are invited to take this opportunity to refresh themselves and interact with fellow delegates. Arrangements for tea for the participants are made on the first floor terrace area. We request everyone to kindly reassemble in the hall in about 10 minutes, so around 11:35.
Thank you.
We will soon begin with our thematic session for the seminar, so everybody kindly reassemble at 11:35. Thank you.
May I request everyone to please maintain silence as we resume the seminar proceedings.
Welcome back, everyone. We now move on to the day's thematic sessions where distinguished professionals will share their insights on GST and its impact across sectors.
We move to our first thematic session titled Impact of GST on Manufacturing and Services, Competitiveness and Cost Structures. This session focuses on two of the most important sectors of the Indian economy, manufacturing and services. It examines how GST has influenced cost structures, operational efficiency, and overall competitiveness within the sector. It is my privilege to introduce you all to our today's resource speaker of this session, CA Bhumika Chaitanya Agarwal, a practicing chartered accountant with over a decade of experience in the field of taxation and financial advisory. She runs her own professional practice and works closely with SMEs, corporates, and business professionals, assisting them with strategic planning, risk management, taxation, and financial compliance. With her specialization in GST, taxation, and regulatory compliance, she regularly advises businesses on navigating complex tax frameworks and strengthening their compliance processes. With her strong industry experience and practical understanding of GST, we are sure that today's session will provide valuable insights into how taxation policies influence business operations, cost management, and sectoral competitiveness. Before we invite her to begin the session, we would like to present a small token of our gratitude towards her. May I request the student coordinator, Ms. Harshali, to kindly come forward and felicitate Bhumika Chaitanya Agarwal. Thank you, ma'am. May I now request CA Ms. Bhumika Agarwal to kindly take the stage and share her insights for the thematic session topic Impact of GST on Manufacturing and Services, Competitiveness and Cost Structures.
हेलो ऑन करना पड़ेगा Good morning, everyone. My name is CA Bhumika Agrawal, and today, first, I would like to thank Dr. Natika Poddar and the entire management committee of the college for giving me the opportunity to interact with all of you today. Today, we are going to discuss about something that impacts all of us every day of our life, that is goods and service tax. GST. First, I want you to think that imagine you're trying to run a national business, but every time you cross a state line, the rules changes, taxes multiply, and your truck comes to a dead stop. How would you feel? This is what exactly the pre-GST era was. We were geographically one nation, but economically we were 30 different markets. Over the next few minutes, we are going to discuss about how a 17-year reform solved supply chain problem, eliminated cascading effect, and also created an immensely high growth career opportunities for all you guys. Now, let me ask you a quick question. Which tax do you think gives more revenue to the government? Income tax or GST? Yes. Mostly people think that income tax contributes more, but surprisingly, the GST contribution is approximately 22 lakh crore annually, which is almost equal or a bit more than the entire income tax collection of the nation. Yes, this is how GST has replaced 17 different taxes and 23 cesses. In simple words, GST means one nation, one tax, one market. Interestingly, India was one of the last major economies to adopt GST. Countries like New Zealand and Australia had implemented it decades ago. Yet, despite of the late entry, India is one of the largest GST system with around 1.4 crore registered taxpayers, and it has not only just made a last entry, it has also created a big impact globally. The economic impact of that 17-year wait has been staggering. When GST was introduced in 2017, India was roughly the 6th largest economy in the world. And today we are 4th largest economy in the world. And it is said that in the coming few years, we'll become the 3rd largest economy in the world. Yes, after US and China, India will be the 3rd largest economy. While many factors have contributed to this growth, GST has played a massive role in this by finally creating a unified national market. Suppose, for example, Tim Cook wanted to start manufacturing of iPhones in India. Before setting a selling price, what do you think he would have done? He would have to hire a team of consultants. This we are talking about pre-GST era. He would have to hire a team of consultants, tax consultants, to explain him all the different tax laws. Imagine how troublesome it is. There was no ease of doing business. Even after studying so many taxes, he could not have come to a fixed uniform selling price because VAT was different for all the states, which he can have now. Now, to get all the states to agree to the 17-year compromise, now to get all the states to GST was first proposed in the year 2000 to be launched in the year 2010. But it took almost 17 years of intense negotiations between the central and state government before it came to reality in the year 2017. It coming into reality even had few compromises had to be made, like massive revenue generators like petrol and petroleum products, electricity and alcohol are still deliberately kept outside GST system. Now, to understand why we desperately needed this 17-year reform, we have to look at what India was like before 2017. Economically, we were not a single nation. We were essentially 30 different fragments. If a manufacturer, you're not changing the slides? It's for, no, further, more, Yes, further, next, next. What's kept outside? This is also covered. Next, the pre-GST era cycle. Okay, this is done. Yeah. To understand why we desperately needed this 17-year reform, we have to look at what India was like before 2017. If a manufacturer in Maharashtra wanted to sell goods in Tamil Nadu, they didn't just had to ship it. They had to navigate through excise, VAT, central sales tax, entry tax, octroi. Yes, next. Yeah, the trucking crisis. In this, let me give you an example of how inefficient this was. The World Bank noted that Indian truck moved barely 250 kilometers a day compared to the 800 kilometers in the US. Why? Because trucks would sit at state borders for hours, sometimes even days, just clearing paperwork and entry taxes. Companies actually opened small, highly inefficient warehouses in every single state just to avoid a 2% CST. It made no logical sense. It was purely for tax avoidance. If you look at the screen behind me, change the slide. Next slide. Next. Yeah, if you look at the screen behind me, a 100 rupee manufacturing cost goods, when excise duty was added of rupees 12, the total came to 112. On this, there was VAT, which was still added of 12%. So it was not added on the base price of rupees 100. It was added on full 112. So it was including base price plus tax of excise duty. So the total price came to 125.44. So this is called cascading of tax. Means taxing the tax. Next slide. Yeah. So, after GST, the same goods, when we see a 100 rupee good and 18 rupee GST is added 18%, the price will come to 118. The most goods and services fall in the 18% category. So the final price comes to 118, and which now earlier was 125.44. So more than 7% we are already saving on this just by avoiding multiple taxes. So how did GST fix? There are some other aspects also. You can see in the pre-GST era and the post-GST, there were other differences also. Like first, in the pre-GST, the tax structure, there were multiple taxes. There was CST, VAT, entry tax, octroi, and post-GST, there's only one single tax, GST. And the cascading effect. Earlier, tax was calculated even on the tax. And now, only one single tax is tax, so there is no repetition of tax, and we can even claim ITC of the tax which we have earlier paid. Interstate trade earlier applied CST, Central Sales Tax. Whenever a person in Maharashtra wanted to sell goods to a person outside Maharashtra, they had to pay Central Sales Tax of approx 2%, which they don't have to do it now. Now they are doing, now it comes in IGST, so there is nothing additional which we are paying. We are still paying the same 18% for most goods and services. Instead of paying CGST and SGST, we are paying IGST. IGST is for integrated tax, and it is basically for manufactured goods sold outside Maharashtra, means it is sold outside the state. And the logistic compliance, like we talked about, here earlier trucks had to wait at borders for hours, and now because of e-way bill system, this problem has also been solved. The compliance earlier, it was manual, and if a company is having many branches all over India, they had to do all the paperwork for all the branches. And now there is only one GST portal. So the compliance part has also reduced. Next. How did GST fix this? Let's look at our biggest growth engine, manufacturing. Pre-GST, the hidden embedded tax on manufactured goods hovered around 26.5%. Today, most manufactured goods sit comfortably in the 18% bracket. We have covered this slide, but almost just one point I think we have not covered is in GST, there is no tax on exports. Like if a person manufacturing good in India is selling to outside India, then there is no tax on that. It is zero rated tax, plus the benefit of exports is that the ITC, you can claim full refund of ITC. So this boosts our economy and exports. Next slide. Yeah, so like how we covered, so now after this GST coming into picture, the same 100 rupee manufactured goods, after GST applied of 18%, the final price comes to 118, which earlier before GST it was 125.44. Next. This also we have covered. Next slide. So if we see the cost structure, the raw material price we are keeping same. Like if you see, if you, previous slide. No. Previous. Yeah. Here before, the raw material price was 100. For before pre-GST also and post-GST also, we are keeping the raw material price same of rupees 100. And the taxes before pre-GST, it was coming to around 30 with all the cesses and excise duty and everything. The taxes came to around 30 rupees. And post-GST, it is almost zero because we can claim ITC. And the transportation cost, which was earlier 20 rupees, has significantly reduced because of the trucking crisis which we were talking about. And then after that, taking into consideration, the total price pre-GST was 150 rupees, which is now 115. So if you see, it has almost reduced the price by 25%. More than 25%. It is a huge figure. The real game changer was the seamless flow of ITC. Manufacturers could finally claim credit not only on the goods or raw materials which they purchased, but also on the services which they were availing, like logistics, advertising. Because of state checkpost, companies stopped building warehouses based on tax laws and started building them based on business efficiency. Take a giant like HUL. Before GST, FMCG companies maintained 40 to 50 small warehouses across India. Post GST, they shut down and built massive automated mega warehouses in central hubs like Nagpur or Pune. If you look, after GST, we have seen record high production in our country, which has resulted in increase in employment, tax, revenue, and also increase in GDP. Now let's talk about service sector. This is where GST affects all of us every single day. Before 2017, services were tangled. Services were tangled up in a separate service tax. GST brought them under one unified umbrella, usually at 5% or 18%, and taxed them at the point where they are actually consumed. Like every one of us know that GST is a consumption-based tax. Let's look at the next slide. Earlier, services were mostly taxed at 5%, 18%, and 28%. 5% for most of the transport services, 18% for most professional and other services, and 28% for luxury services. Now, if we see this real life examples, like almost all of us use Swiggy, Zomato, Amazon, Flipkart, Ola, Uber. When you order food of 1,000 worth of food on Zomato, 5% GST is collected by the platform and it is paid to the government. And same, it is if we book a ride of 500 Uber ride, 5% GST is attracted. Earlier, independent drivers were largely outside the GST net. Now, the platform ensures total compliance. If you pay 100 rupee delivery charge on Amazon, this is treated as a service with an 18% GST. From your morning tea to your weekend entertainment, GST is a consumption-based tax. And as we move into GST 2.0, which you can see on the screen, rate rationalization is making consumer appliances cheaper. Next slide. Yeah. In this, if you see, pre-GST 2.0 and post-GST 2.0. Pre-GST 2.0 means which before 22nd September 2025. And after this announcement of GST 2.0 made by the government, the post-GST, the rates have decreased significantly. Like automotive sector, if we see, when we buy a car, earlier GST was 28%. Now it is in 18% category. The white goods, consumer appliances, which were earlier taxed at 28%, is now taxed at 18%. Healthcare and pharmaceuticals, medicines and all, earlier were taxed in 5 to 12% GST, and now it is 0 to 5% category. They have eliminated the 12% slab. Tourism and hospitality earlier was mostly 18% and now it is 5%. Insurance services, medical insurance, life insurance, earlier were taxed at 18% and now they are exempt from tax. This is a huge boost for insurance sector. Next. Consumption. Okay. GST. As we look to the future, we are entering the era of 2.0. We are moving towards a standard 18% rate for most goods and 5% merit rates for essential goods. and a higher demerit rate for luxury goods, which is approximately 40%. This brings massive tangible benefits to all of us. Most importantly, it heavily supports national initiatives like Make in India. Because that old cascading effect is gone, our domestic goods are no longer burdened by hidden taxes. Today, Indian manufactured goods are highly price competitive against imported goods, which gives massive boost to our exports. Anybody knows the benefits of GST 2.0? Like we have seen, it has reduced slab rates, most of the services and goods, it has come down. And what other benefits do you see? It is also promoting faster refunds, better compliance experience for the consumers, and also it is supporting MSMEs. Next slide. Now we can talk about the career opportunities in GST. Now, since we have so many bright young minds here, I want to talk about your future. GST just didn't transform the economy, it created an entirely new high growth job market. Every single business from Borivali startup to an MNC requires desperately a GST expert. How many of you think that only a chartered accountant can make a future in GST? It is a very common misconception. While being a CA is a fantastic path, it is absolutely not the only one. If you want to enter in this space, there are 4 other powerful options for you. First, GST certified practitioner. As a commerce graduate, you can pass a government exam, legally represent your clients, and start your own consultancy right out of your college. Second, you can become a corporate taxation analyst. Large companies hire experts to manage their input tax credit using softwares like Tally, Prime, and SAP. And also there is reconciliation specialist. How we used to do bank reconciliation, it is exactly like that. In this, we have to do reconciliation of our books with that of the GST portal. Your job is to ensure a company's private sales book perfectly match the government's GST portal. Preventing these mismatches saves companies millions in penalties. And fourth is a tax litigator. If you are pursuing an LLB, specializing in indirect tax law is highly lucrative. Businesses constantly need sharp legal minds to represent them in GST tribunals. Whether you become an entrepreneur, accountant, or corporate executive, GST will be part of your daily professional life. And now comes the practical experience. Even after gaining all the theoretical knowledge, you will still need practical experience. So, I would wish that you all start practicing with almost daily with any of the company if you can still do. So like in all the professional thing, if you see, like in CA also there is articleship. For doctors also they have internships, because they actually understand the importance of practical knowledge. Next slide. Next slide, take it. So, GST 1.0 unified India into one tax market. GST 2.0 will make that system smarter, faster, and more transparent. Finally, it is important to acknowledge the architects behind the scenes. Implementing this massive shift was a revolution led by the chartered accountants community. They worked tirelessly to transition millions of businesses into this new era. And we truly appreciate their contribution to this nation's economic fabric. Thank you so much for your time, your participation, and your fantastic energy today. I wish you all the absolute best in your careers.
Thank you, ma'am, for the informative session and for sharing your valuable perspectives on the impact of GST on manufacturing and service sectors. Once again, a reminder, we are open for questions.
Okay. Thank you once again, ma'am. It was a great session. We will now... Oh, we do have a question.
Mike.
Thank you, ma'am, for wonderful insight. Hello. Hello. Hello.
Here you can come and ask.
Hello. Hello.
Thank you for your valuable insight. As now the GST slabs have already decreased, only 3 slabs, but from the GDP contribution, major Indian GDP contribution come from the financial service sector. So in that earlier it was charges GST at
bank
15%, yes, and now it increased to 18%. So what is your point of view on that? Compliance cost and ITC, what is the key takeaway for the financial service sector?
Nothing. Government is always wanting to reduce GST on basic necessity goods for common people. So, for common people, I don't think it will impact them if they are making few transactions, and hardly on bank charges. If we see, it is they will only levy tax only on the bank charges. So on bank charges, even if they increase from 15 to 18% for common people, I don't think it will create an impact. Only for corporates and all, it will create an impact. So they have to compensate. If they are giving benefit to the common people, they will obviously collect tax from the rich people. So it is always like that.
Okay. So as you are also practicing CA, so what is your point of view or your personal point on the financial service sector, particularly on that domain? What changes you feel, or the current rate that applicable, it is correctly, or it won't, because it will increase some of the cost for the businesses as well. So
it will hardly make an impact of that, but I strongly feel that government is towards moving more towards financial sector. They are trying to curb cash transactions as much as possible. Here also, if you see, we are mostly moving towards digital e-invoicing. So then all the cash transactions, UPI and all will only exist, and there will cash transactions won't exist. So it is always the financial sector, so banking and financial sector will always grow in India, because India is a developing country and there is no other option than the financial sector. If we want to become a developed country, we have to do all the transactions through bank account.
sure. Thank you for your opinion.
Yeah, welcome.
Are there any more questions?
Yes.
Thank you. Uh, while explaining, you said just now that petroleum, electricity, and alcohol, it is out of GST area. So, is there any specific reason for that, or just central government wants to keep all these three things in their hands?
No, it is not the central government who wants them to keep it in their hands. It is the state government who wants them to keep in their hands, because it is these products are massive revenue generators. Say they are so
For state?
Yes, for states. So the states are not ready to compromise on their tax revenue and share it with the central. And because so whenever we negotiate and come to certain points for any deal to be made, we have to negotiate, and sometimes we have to make compromises. So for this, even in central government made few compromises and agreed to the state government's request to keep them out of the GST. But now also even they are trying to pull them into GST. Let's see how much time it takes.
Okay, thank you so much.
You're welcome.
If GST eliminates cascading effect, why do we still have high prices in some industries, sectors?
Which industry sector you're talking about? See, like if we compare an AC, I was just surprised to see an article that AC price of any ton you take, it was same in 2015, it was same in 2018, and even after so many years, it is same even in 2026. Because now 28% this slab has come to 18%, if you see. So they are passing on the benefit, like 10% they have given this to, and even other things also, white goods you see, almost the prices for them are still the same. So if you're talking about any specific sector, then I don't, then you can ask. Otherwise, most of the goods, if you compare, the price is still the same over the past few years.
Thank you.
Welcome. Anybody else wants to ask or want any clarification, or you want me to repeat any? Yeah, ma'am.
My doubt is with regard to the GST removal of insurance sector. Insurance sector.
Okay.
So very recently the insurance participation, foreign participation was increased to 74%, and at the same time this GST has been removed from this particular sector. What may be the reason for this? Only because insurance is a necessity, but at the same time foreign participation is increasing.
Yeah, but government wants to pass on the benefits to the consumers. They've collected massive, and the GST collection over the past few years, it has increased tremendously, and the government is planning to pass on these benefits to the consumers, so that like if you understand, insurance is a necessity, and they want us to take medical insurance and life insurance because it is not replaceable, and to promote this, they are reducing this GST on that. And because of this, I don't feel that foreign institutional investors will have a problem. In fact, it will boost the economy only. Anybody else? So I think we are done. tell me now. Sure.
But then it is basically just about the GST. If you have to like summarize, if students like us, like management, I'll just feel free. But we have just few more questions.
Yeah, that is okay.
If according to you, if we talk about the competitiveness aspect of it in the manufacturing sector, like what would you say GST, how does it play a role in that? The competitiveness aspect.
Yes. You say it in the mic, na? That is okay.
Say it in the mic, na, so everyone can hear.
Yeah.
What is the role of GST in improving the competitiveness of the manufacturing sector? Like you mentioned in the session, if you had to give advice to management students like us, what would you say about this sector specifically?
See, in manufacturing sector, because like cascading of taxes has reduced, means it has been eliminated. ITC benefit, we receive full ITC benefit, and there is no trucking crisis, and there is no warehousing problems now. So because of warehousing also, the operational cost, the operational cost has also come down significantly, because they don't have to maintain inventory at each warehouse. So because of these issues, the GST which was launched, so now the products are more competitive, because the price, because of these issues, has come down. Now we don't have to pay tax on tax, and there is full ITC available. So the cost price will always be less as compared to the pre-GST era. So now Indian goods are very competitive as compared to the global goods which we mostly purchase and we use.
So ma'am, how would we navigate through like different sectors? This is just sector specific, right?
Like manufacturing sector right now we talked about. The same is with service sector also. In service now we get ITC of not only just the services which we consume, like, but also for like if I, being a CA, I am raising a bill of 1 lakh to my client and I am charging 18% GST. So I'll be receiving 18,000 as GST. But while paying to the government, I don't have to pay full 18,000. What I will do is, I will first see what expenses I have made on that. I have paid ITC already. Like if I am paying rent, then I'll reduce the tax which I've paid on rent, I'll reduce that. I'll also reduce if any, I have consultants I have hired for that, I've paid them also any GST, I'll reduce that also. And even for office supplies, earlier office supplies and all these materials, like we used to buy mobile phones, laptop and all, in that they used to charge VAT. So for service sector, they never got credit for all these things. But now after GST coming into picture, they get credit for all the materials also they buy. Not just printing stationery, laptop, mobiles, any material which we buy for doing any business. So because of that, the cost has drastically reduced for all the sectors. It is not sector specific. For all the sectors, the cost has seriously come down. Yes, and so I feel that our goods and services are very competitive globally, and there, in the coming few years, we will see that India is one of the best developed economy. Yeah, welcome.
Thank you for answering all of our questions as well.
Yes.
And the session was extremely engaging.
Thank
We
you.
are truly grateful for everything that you said today. And I hope everybody had a wonderful learning experience today as well. There are some questions.
Yes.
There are more questions. Sorry.
Yeah.
Ma'am, like you said, when the GST slabs were reduced, they were basically for the consumers, right?
Sorry?
The GST slabs that were reduced on the products, they were reduced on the finished goods, right? But they
Yes.
must have been reduced on raw materials also.
Yes.
So the manufacturers who are manufacturing goods, for them, they must be, like for them, the cost of the product must have reduced. But we
Yes.
don't see them passing down that benefit to customers. Why is it like that?
Like like which sector and which product you are talking about, because if you see almost significantly all the prices have come down. If you order anything from Amazon or Flipkart, you just see how much discount they are giving. Even on Myntra, if you order any clothes, just check out how much discount on every clothing product also they give.
Ma'am, they are giving discounts on the GST that we were paying now. Like if, let's say a finished product, the GST slab it reduced from 20% to 5%.
Yes.
So that much concession we are getting.
Yeah.
But for the manufacturers also, for their raw materials, some
so they are
GST must have
giving,
reduced.
actually if you now see almost everywhere, the MRP, they are keeping the MRP same. They cannot, basically, for all the products, they cannot reduce the maximum retail price. So they're keeping the MRP same, but everywhere if you see, they are giving very high discounts on all the consumables also. If you see all the food items also, if you see, the GST rate has come down significantly. And like if you see, for example, ghee, just compare the price of ghee last year and this year also. And also if you see any oil price or any white goods, almost all prices have come down significantly. Not just the GST part, but even, and every year, see, we also have inflation, but still discounting that also, inflation part, the prices have come down.
Thank you, ma'am.
Yes, yeah.
Just now you were talking about GST 2.0,
Yes.
right? So after reduction of the taxes, GST, the goods which were manufactured before GST 2.0. So that time I had read in the newspaper that many of the consumer retailers, they had this inventory which was taxed before GST
Yes.
2.0. So how these manufacturers or how these retailers then dealt with this inventory?
Means, see, like if we see, if you are talking about some white goods, so then they changed the MRP price. And if you're talking about some like food material, like we buy any packaged product,
Okay.
on that they had to change the packaging. If they were already supplied in the shops, then nothing could have been done about that. Like I really remember one example, like in this medicine shop also, the medicines were already supplied. And so while going to the shop, after the GST rate came down, I was also not ready to buy the similar product for higher price. And I was arguing with the shopkeeper to give me the latest one so that the GST,
Yes.
I also get the GST benefit. So what all all the shopkeepers, what they did is they had the stock which was left with them, they had to give back to the companies again, and then they did the repacking and they sent the goods again to the consumers.
Okay. Yes, thank you, ma'am.
Yeah. Yes.
So my question is, are small businesses disproportionately affected by GST compliance costs?
No, see, earlier GST was very complicated. When it was introduced, continuous GST notification circulars were coming. So it was very complicated. But even after that complication, they just have to hire one tax consultant and not multiple tax consultants. Like earlier there was VAT, excise, entry tax, octroi. So for everyone, we needed a different team. So now they just need one team. And after GST 2.0 coming into picture, the compliance is, they are still trying to reduce this compliance part. So they are trying to make the compliance more easy for consumers. They understand that it is difficult. And mostly if you're talking about small businesses, small business people, with less than 40 lakh, they don't have to register also themselves under GST. It is voluntarily they are registering, so they are ready to pay GST because they are getting the ITC also of that.
Thank you.
Welcome.
Thank you, ma'am.
Thank you once again, ma'am, for the informative session and also for answering all the questions asked by our participants.
We truly enjoyed the session a lot. We will now break for lunch. Participants are requested to kindly collect their lunch boxes from the first floor terrace area. We request everyone to kindly reassemble at the hall again, as we will continue with the second thematic session. Thank you and please enjoy your lunch. We will reconvene at 1:45 sharp. Thank you.